On this episode of the Stock Market Playbook, we have Amit, the man, the myth, the legend. We talk about some great stuff. Amit has made major waves lately in interviewing the CEO of Nvidia, of Palantir, of Robinhood. We have a great discussion about why these companies are interesting and why they may still be interesting, along with his investing approach. Have a look. I think you're going to love this episode. Okay, thanks, Amit, for joining us today. We're happy to have you on the podcast. I think we have some great things to cover, so I'm definitely looking forward to diving in.
Yeah, thank you for having me, Jared. Appreciate it. I'm excited to talk.
Absolutely. Where are you joining us from, by the way? Are you in New York?
I am in Jersey City, which is very close to New York, about 20 minutes away in New Jersey. But yeah, not in the Mecca of finance, but close to
it. I mean, sometimes not being right in the Mecca, just a slight travel outside is not too bad. I was at Hedge Fund Week in Miami a couple weeks ago, and the poor New York, New Jersey, Philadelphia folk were having a heck of a time getting out of town. Are you guys still covered in snow, or has it gotten nice?
It's gotten nicer. It's still cold. We had a couple days teasing us of 70 degrees, but yeah, I think we're going to need till April or May to really see.
Gotcha. Well, that's awesome. Well, so you've had some pretty interesting interviews lately. You've had some interesting contact with a couple of obviously big name CEOs, and let's talk a little bit about that. How have you gotten into contact with Nvidia CEO and Palantir CEO and Robinhood? How did your journey begin and get you where you are today?
Yeah, a lot of it was pretty organic. I mean, I started covering these stocks when they were around $5 or $6. Palantir and Robinhood, ironically, both with the same price. Around Palantir was 2021, Robinhood was around 2023. But around that 2023 timeframe, before we kind of have this massive bull market with ChatGPT and all this AI revolution, the stocks were kind of left for dead. Obviously, 2022 growth stocks got hit pretty hard with the broader rate cutting cycle, inflation going up. And so for some reason, and we can get into what those reasons were, I picked those two names as kind of the two horses that I wanted to put my brand against, put myself against. I've made over 3,000 videos on Palantir alone over the past 4 years, just dedicating myself to understanding that company. And, those names have done really well. And I think sometimes when you put in that much research and that much effort, and obviously there's a little bit of luck involved as well to kind of find those names, there's a bit of a story that gets underlooked by the street. And for me, it was a classic retail investor picked up something the street didn't get. A lot of other retail investors started to realize what me and a collective group of people that were analyzing Palantir and Robinhood picked up. And then once the street picked it up, it ended up becoming a pretty big deal. So to your question about Karp and Vlad, I think they have a lot of loyalty and respect for people that are able to recognize things before other people and kind of stick with the story in the bad days. And as a result, I've been able to get in contact with them and interview them, and it's been pretty cool.
That's amazing. They're doing some wild things, and Karp obviously is just entertaining and smart and outspoken, and there's a lot of headlines that guy produces that are pretty wild. Now, when Palantir kind of really made its way onto the scene, I remember talking to a lot of people about Palantir, and they were just saying, what does Palantir actually do, right? Remember early kind of 2020s, like, what do these guys do? Is 80% of their customer base, government contracts? What are they actually up to? And they kind of entered in this very almost like mystique, right? Nobody really knew what Palantir did. And so what kind of drew you to a Palantir? Why did you say, hey, I'm digging in on these guys, and what did you love that you found?
Well, with Palantir, it was really, it was a bunch of different things that came together. The way I kind of tell the story is that I did debate in high school. I was a nationally competitive debater. And to do debate in high school, you have to understand philosophy and a lot of different analytical philosophy, continental philosophy. You have to really understand foundational elements of, people get philosophy majors in college. I would say I got a philosophy degree in high school because I was really obsessed with understanding lots of different principles to effectively have better debates. Palantir is a very philosophical company from a variety of different angles, but one of the core words and concepts you learn about in Philosophy 101 is called the ontology. The ontology is defined as the state of being. So if I said, what's the ontology of the chair? It's for people to sit on it. That is the purpose of the chair. Palantir's core software offering, Foundry, is called the ontology. And I know ontology is a generic sort of data science term, but Palantir kind of really branded it into the heart of how they essentially define the source of truth for your business. And so you have a philosophical term that I know very intimately based on my studying of philosophy being used in the technology context. And then you have a philosopher CEO, a guy who literally has a PhD in philosophy, speaking about the ontological way that data should be structured into an organization. I mean, to me, it was just a match made in heaven of like, I need to know what the hell this company is talking about. And then his hair is just crazy. And I have short hair right now, but I've had crazy hair my whole life. And so there were a lot of things that on the surface appealed me to Palantir. Now, obviously, I really didn't understand valuations at that time. So I started buying the stock at $30. Stock fell to 6, which honestly was a blessing in disguise because, when you go through so much pain together with a collective community, even when the stock is not moving, the reward of the stock eventually moving feels so much better. So definitely bought in high, wrote it down low. And that forced me to be like, all right, I'm down 50% on more than 50% of my investment. I guess I need to dig in and find more about the company. And that's what led me down the rabbit hole.
Interesting. So that was kind of your first foray into major investing, and it just timing was wild. Markets were crashing. This is kind of 2021, 2022
Yeah.
era. And so what did that make you think about? I mean, did it make you kind of question everything that you were looking at, or did you think, look, there's something here. This is a broader situation that's happening. Kind of where did your mind go as you're early in the market? I mean, that would scare a lot of people, I think.
Yeah, I was too ignorant to fully understand what was happening in 2022. I was just learning about interest rates and Fed hikes and inflation and what it means for growth stocks to not get a premium if there's not liquidity in the system and quantitative tightening. Like all this stuff I didn't learn ironically in business school. I had to teach it to myself. And so I taught it to myself and I paid the tuition of learning it by going down significantly on a growth stock at a time where growth stocks were just never going to catch a bid, and it taught me a lot. But I think the reason I kept investing was because I didn't think of it as like I need to reposition my portfolio to like manage the volatility of the risk like a hedge fund manager would, because I didn't have any institutional money that I was managing. I was just like, well, I like this stock. I think the market doesn't understand why Palantir is valuable at $7. I'm going to buy more. And I kept buying. And, over the past couple of years, I've started to understand exactly how the markets react in certain situations. You're never going to be able to fully time or react perfectly to how the markets react, but you can understand that if oil prices go up like they are right now, yeah, growth stocks are not going to catch a bid. That's sort of a basic concept. And 3 years later, I have a better understanding of how this stuff happens.
So would you say you have kind of like I mean, I think in some of your material you talk about some pillars, the things that you want to invest based on certain things being in place. Maybe you can talk a little bit about what those are.
Yeah, I think for me, there's sort of two foundational things I look at when I consider an investment, or I should say three. Number one is the management team, and I really have a affinity towards investing in founders. I mean, the best investments I've had have been founders. The investments I like to allocate capital to are people that are founders because I feel like you can either trust founders or not trust founders. And there's really good operational executives that run companies, which are good, if you're making an educated hypothetical guess on where the stock is going to go. But when you're talking about a multi-year investment where you trust that the person at the helm of the institution understands what to do, usually there's no one better than a founder. And, not every founder is perfect, but I really try to look at, hey, where are the founders that are allocating capital and caring about investor capital, and do they actually care about shareholder returns? And I think people like Karp, Vlad, Jensen, obviously with Nvidia, Elon with Tesla, these have been people that genuinely care about that stuff. Then I look to the next big thing, which is TAM. Right? How big is the market that these companies are going after? With Palantir, realistically, the TAM in 2021 was maybe a couple $100 billion around data science and software. Then AI came. You started thinking, maybe it's $1 trillion. Now, with AI workflows revolutionizing the entire ecosystem of the enterprise, particularly on the government side and commercial side, you've got Nvidia thinking they're going to be doing trillions of dollars of revenue. That only happens if the use cases of the GPUs that they're selling are valuable. And Palantir is one of the only software companies that's growing 70% year over year that can accelerate and accentuate those use cases at scale, which to me signals it is very obvious that their TAM is now in the multi-trillions. And that creates an exciting opportunity to continue holding the stock. And then you have Robinhood, right? Digital financial services. That's a massive TAM. Everyone is going to need to have a bank, a credit card, checkings account. If people start trading more in brokerages, and in this economy, you kind of have to have some form of income outside of your 9 to 5 to be able to survive. So I think these TAMs are super important. These are TAMs that I look to. It's sort of a bottoms up analysis on how strong can the business be if it were to be perfect inside of a broader macro thematic. I mean, some of these drone stocks have been catching a bid recently because even though their TAM is not that big, the TAM in the moment of a war, which we're in right now, is pretty big for the purchase orders to increase. And so
Sure.
I look at TAM, and the last thing I look at is valuation. And I'm not opposed to investing in companies that are not profitable. I did it with Hood and Palantir. But if there's a path to profitability, specifically when operating leverage starts to inflect and costs start to stabilize, which I think there's a few names that I'm in right now where I'm starting to see that inflection, that also is kind of what I look to before making an investment.
So how do you go about kind of identifying these pillars? I mean, do you or these companies of interest, right? There's something you want to invest in. Um, what kind of focuses your attention on that to make you dig deeper?
To like find specific companies to focus on, essentially.
Yeah. What's your like idea generation process?
It's interesting. When it comes to idea, so I think there's two things. I use the LLMs to sometimes scan different things that are happening in the news and say, hey, what is happening here? What is happening there? Do the LLMs actually so for example, for drones, right? I can ask ChatGPT, what are all the drone stocks that are relevant to the Department of War? I know the Department of War has a lot of purchase orders that are starting to go out, and it lists a bunch of names. And you look at then you look more in a fundamental valuation and see what's happening there. So I think the LLMs are definitely important for idea generation. But some of the best ideas I've gotten have been very random, and they've been off a whim. So Palantir, that was philosophically, I was interested in it. Robinhood, I used it every day, and then when I looked at the market cap, I was like, why is it trading at 8 billion with 6 billion in cash? Like that made no sense. I use the product every day. It seems valuable. And then some ideas obviously come from other people. I'm on X and I have a relatively large following. There's a lot of people that send ideas every day. Zeta is a stock I've been interested in recently. I think that has some merits to it just based on the valuation. Then you start reading other people's work. So ideas are not the hardest to come by, especially in the retail community, because there's so many people that are now building their brands and pitching different ideas every day. But falling in love with an idea is difficult. And there's only been 3 names I've really fallen in love with the idea. And I hesitate now that I have a larger audience to explicitly fall in love with an idea, because now if I love it, I better be ready to defend it because people will take it seriously. And if I'm not ready to defend it, then, obviously it just might not be easy to be long the name.
Yeah, yeah, for sure, for sure. And traders are infamously short memories, right? You did great on something, we love you. Something you like is not doing great, we hate you. And it's an emotional community for sure. So Zeta's one you're liking. I mean, what are some stocks that are slowly maybe bubbling a little bit? You're starting to dig in. I mean, is there some new ones out there? It seems like you're pretty focused on tech, maybe a little bit of fintech, definitely AI kind of driven. I mean, is that really your wheelhouse you try to stay in?
Yeah, I mean, one name that I think is under the radar is a name that I really like. It's called Grab. It's in Southeast Asia, and this is a company that I think is inflecting towards profitability. I think they are playing the GDP growth rate, which is significantly higher than the United States of an entire region, and they essentially have not a monopoly, but they are easing towards being the dominant player in the entire region. Think of Uber, PayPal, Shopify, DoorDash put together in one super app. I think the stock is 95% undervalued right now, so I think there's a world in which that stock can double. And so far, I've been wrong on the name. I called it at 450 last year. It's at 380, so it has been down for a year. But when I initiated coverage on Robinhood and Palantir, they took about 2.5 years before they really made the move. So for me, I like to give a name at least 2 years. And I know we're also impatient in this market where stocks go from 5 to 10 so easily. But give it some time to actually let the thesis play out and see if there can be a fundamental story. I'd rather read a name that I think is fundamentally undervalued, that's cheap in my opinion, that has real fundamentals. I mean, the company is growing EBITDA 40%, has 6 billion in cash, enterprise value of 9 billion, relatively cheap, versus a small cap $500 million company that doubled last month that people are chasing, that no one even knows why they're chasing it, but the stock's moving up, right? Like I feel like I've evolved from that stage as an investor. And 2021, I probably would have bought that stock. 2026 is just a different story. So Grab is one of those names that I'm really interested in. And then, I wrote an article yesterday on my Substack. I continue to double down on Nvidia. I think the way the street is treating the name continues to be a reflection of them not fully understanding how serious the AI life cycle of CapEx spend and implementation of use cases is going to be. I believe Jensen when he says we're going to have trillions of dollars in revenue. And Nvidia is my favorite Max 7 pick in the entire market right now that I think is going to be the beneficiary of all of the different use cases we're seeing, particularly from the Anthropics and OpenAIs, where their growth is becoming undeniable. So I would say Nvidia and Grab are two of the names that are up there for me.
The AI topic is people don't. I'm starting to kind of pick up that people don't know where to take it. Right? Has it's been so prolific and so everywhere for everybody, and now it's kind of is the run taking a big break, a little break? What's happening? And so compare this AI revolution to something in the past. Where would you put the AI revolution compared to what?
Well, I think it's something we've never seen before outside of the dot-com bubble. Um, and the dot-com bubble was the internet. The internet was really important. Obviously, it democratized so much access to distribution, and everyone had the opportunity to build something. Now with AI, it is not just about the ability to distribute your content on a personal website. It's the ability to make the website in and of itself by telling Claude that you want a website. And so I think the distribution of uh, productivity in the context of being able to build something, YouTube on the internet means everyone can post videos. But if you could build the next YouTube, because that requires a lot of engineering, and one of the biggest use cases of AI is coding being done for you. To me, I just see it as this layer of abstraction that allows you to do what you want to do, run wild with your imaginations without having to know how to do it. And that is the ultimate gift of cost reduction, because instead of hiring a developer for 150,000, you can use the big tech subsidized capex of these GPU models to then be able to ask Claude or OpenAI or Perplexity to do it for you. So to me, it's bigger than the internet, because it's intelligence, which also commoditizes labor, which brings up the question of job growth writ large. But when things can be done in an automatic way versus things still needing to have the work to be done in order to distribute them, that is very big. And I think the enterprises are realizing how serious that is. I think the robot companies are realizing how serious that is. I think FSD and self-driving is realizing how big that is. There's use cases like drug discovery that probably even haven't hit the mainstream yet in terms of how strong the magnitude of their impacts could be. That to me means that this is probably a multi-trillion-dollar revolution that is going to be happening over the next decade.
It is wild. AI, the timing was good. We've had quite the foundation of the internet, endless amounts of information. I mean, it was not that long ago that we had to type into Google, red house options, right? And and try to, and then you have 300 million results that you have to start to read through, right? And try to find which one's the best one. And nobody even goes to page 2 on Google, right? And so on and so on. And then you get this like door into this entryway into like taking and organizing the information you need specifically just on the information side. That's excluding coding and automating and all the things that it does. And so it's interesting. I hear people say, it's similar to a internet revolution, but the internet was, remember how useless the internet was in like the early 2000s, and like it was just still trying to get up to speed. I mean, we had dial-up internet. I remember being in college in like 2000. One of my professors said, "You can email your paper to me," and I was like, okay, we're putting this to work. Like, I appreciate, And now we have this, like, everybody has an expert in their pocket, everybody has a programmer in their pocket, everybody has a therapist in their pocket. They have all this craziness. And so it is hard to imagine that this is not just scratching the surface. But what does the market think? How are these companies going to be treated in the near term? Is certainly the big question. And so it's interesting for you to say, Nvidia. I mean, obviously they are the players in this space. Nvidia it's not been that long since they were making, I mean, what was Nvidia's big thing? They were making chips for graphics cards for video gamers and so on. And then in the last several years, they've turned into the most valuable. Are they currently the most valuable company? I think they're ahead of everybody
Yeah.
right this moment.
Yep. Yep.
So it's a tough one. People that I talk to on the podcast, they say, I'm out of AI stocks, I'm out of Mag 7 stocks. I'm looking for opportunity elsewhere. I'm buying steel, I'm buying aluminum. But then others say exactly this, right? The revolution is just getting started. So you're looking at this. I mean, if I look at a Nvidia chart right now, we're basically let's see, July. Since about July, we're creeping up 8, 9, 10 months of just totally sideways, going nowhere. So on the technical analyst side of me would say, okay, big uptrend, consolidation, continues higher from here. all the underlying fundamentals being in place. And is there a world where you see Nvidia dropping 20, 30, 40% and buying that dip, or you think whether it does or doesn't happen, you're still in?
Yeah, to me, when I think about Nvidia, and I've spent a lot of time over the past couple of days past couple of weeks, quite frankly, trying to understand why the street is discounting it. And it comes down to a broader fundamental question, which is that the durability of the revenues are being in question, right? Why does Costco and Apple and Walmart get such a premium for significantly less growth? It's because, well, people are always going to buy toilet paper, they're always going to buy Kirkland water, and they're always going to buy iPhones, but we're not always going to buy GPUs. And that is where I think I just have a fundamental disagreement with how the street is thinking of GPU growth. I mean, you have a company that has accelerated revenue growth, implying they're going to grow 81% next quarter with 75% gross margins, beat every expectation you can imagine by a wide margin, and it's trading at 15 times forward earnings. Like, that doesn't make any sense unless you heavily doubt the capacity for those earnings to grow. So if we were to get a 20, 30% drop on Nvidia, I would have no choice but to buy the dip, not assuming something fundamentally has changed, like the GPUs just don't work anymore or something like that. If the macro gives that type of an opportunity, I would think it's DeepSeek, which is when I initially started buying Nvidia back in January of 2025. And that would be because no matter how much the market thinks the growth of those revenues and earnings is not going to continue, if you're in the AI world and if you have a fundamental thesis on AI, it will continue. Anthropic just added 6 billion of ARR in a month. If they keep doing that, they're going to need a lot of freaking compute. And as much as I love AMD and Broadcom, they're not touching Nvidia here. So yeah, if there's a 20% dip, I think, and by the way, I don't think Nvidia can fall 20% unless the market falls that much, because, or relative to that proportionally, because Nvidia is 8% of the S&P. So it's funny to me when all the senators are like, we need to stop Nvidia from selling chips to China. I'm like, all your constituents have 401ks that are going to get wrecked if that happens. So Nvidia is the market. I think you got to own it.
And Nvidia is indeed the market. Now, I mean, what is our, where are people? So we've been talking basically about where people are not seeing the value, right? Everyone, there's a lot of hesitancy around Nvidia and some of these stocks. They've expanded and increased in value as much as they have. Maybe this is it for now. What about where is the AI risk here? Like, let's just say, for example, some new technology comes out, whether it's from Nvidia or from some other company that says, hey, we can do this amount of computing on 50% the capacity. Or something similar.
Yeah, that would be a bear case. I mean, obviously, if there's less compute needed to be able to generate the same type of ROI in terms of token generation, 100%, that's a bear case. I think the inference upgrades that NVIDIA has been able to initiate, particularly with Vera Rubin, and the ability for them to show, I think it's like a 50x increase over Blackwell, and then Feynman's probably going to be even above that. That is where, from a supply chain perspective, and then obviously a tech perspective, you can get into CUDA, which is the software mode built on top of these GPUs. That's not being touched by any competitor. Now, maybe there are some working on it, and there's some startups that have tried. There's probably some stuff in China that's going after it, but to the best of my knowledge, it's hard to imagine anyone overtaking that long-term moat. Now, maybe years from now, there's something, but in the short term, these revenues are only going up. And I think Jensen knows it, which is why Jensen's been so pissed off that the stock has been flat, because he's like, guys, what more could I possibly do to get you? And I think also it's a $4.5 trillion company. Like, it's hard for it to go to 8 trillion, right? So I get it. And I understand why the market is hesitant, but I also think that means that the opportunity is pretty advantageous here.
It's a wild thing to see a stock increase as much as they have. And you're right. A company, when you're the largest market cap out there, it gets increasingly difficult to add upon that.
Correct.
And Jensen's doing, he is one of the smartest people of our generation, and I think he's well equipped to navigate this. But so bull case, we've got more upside in the long run as far as total addressable market on an Nvidia, on a Palantir, on what do you say? Let's just say on a Palantir situation, you have somebody, and I would say his track record's a little spotty at this point, but you have like a Michael Burry who says Palantir has made more billionaires than it has produced in revenue. What do you say to the underlying fundamentals of Palantir at this valuation, at this price?
Yeah, look, I have a lot of respect for Michael Burry. I don't think he understands Palantir. And here's the punchline here. I'm just going to give it to you straight before I get into the nitty gritty. If it was easy to short Palantir on valuation, everyone and their mother would have shorted Palantir on valuation. This is not rocket science. If there is alpha in the market that is so glaringly obvious, oh my goodness, this is the most overvalued company on the planet. Let me get some esoteric statistic to make the analysis on how overvalued it is. Why is everyone not short the most overvalued stock in the market? Maybe it's because that's not the basis on how you short some companies. And Tesla is the most obvious example of this over the past 10 years. So to me, I quite find it comical that Burry's big short, which was a legendary short in 2008, which discovered something that everyone missed. And it was the basis for him building his entire reputation and brand and making a lot of money. The opposite happened this time on his big short 2.0. It's something everyone knows. Everyone knows Palantir is an expensive stock. No one's saying a company doing $4 billion in revenue, trading at $400 billion market cap is not expensive. Like, I think the employees, the CEO, the C-suite, all of them would be the first to also say, and they've admitted on earnings calls, yes, our stock is volatile. Yes, we understand we're getting a premium, but there's a reason for that. And the deeper reason comes down to the 4.5 years of research that the retail community has done collectively to understand why the market would want to price in that higher premium. And before we even get into the qualitative elements of it, let's just look at the numbers. There is no software company on the planet that's growing 70% top line, guiding for 65% growth. They're going to do $7.25 billion in revenue, and took adjusted operating margins from 17% to 51%. Like, you don't get those types of growth rates. These are some of the best quarters we've seen in the history of quarters, and that's quite frankly because, and it's ironic you're asking this question because Palantir just got an upgrade by D.A. Davidson yesterday, and I'm reading from their sell-side report just now. We have all but given up on other public software companies being able to replicate Palantir's success. And then they say, as another idea for investors that want to participate in all this winning and are unable to buy Palantir due to valuation, they're even acknowledging the valuation is tough, we propose a basket of publicly announced, publicly traded companies that are Palantir customers. They started recommending 7 to 8 names of customers that are using Palantir software if you're afraid to buy Palantir due to the valuation because of how valuable the software is in terms of generating real results for their clients. So I think the market is looking at where are the AI names in software, where are the AI names that are growing, that have real margins, and that are actually providing value. Alex Karp, the CEO of Palantir, consistently talks about we are a value creation company. We get paid based on the value that we create. It is a very hard burden, especially in software where they sell steak dinners and PowerPoints, to be able to hold yourself to the burden of if we get paid, it will only be because we made you more money than you're paying us. And that's what Palantir has figured out. And now the numbers are showing it. Is it expensive based on the valuation? 1,000%. I think it's been expensive since $50. But that's not always been the reason to be bearish against the name. And for Michael Burry to publicly be bearish against something that we already knew when the stock was trading 40% lower from here is it's just comical to me. I don't really think he's done the research on Palantir.
He has some interesting points of view that are, in their own way compelling, but I mean, you don't fight the tape too much, and certainly Palantir has held its valuation and seems to be strong where it is. What are you seeing with Hood? What are you loving about Hood? I mean, obviously they're making their big runs into some of this stuff. Vlad Tenev's doing lots of crazy things. Is he equipped to continue running the company? How have you felt about that path that they're on?
Yeah, I think Robinhood is going to be a generational company. I do think Robinhood will hit $1 trillion market cap one day. It's a little bit of a different path to get there than Palantir, which has recurring revenues and really good margins. Robinhood also has incredible EBITDA margins, incredible top line growth. The problem is Hood is not a software company. Hood is a technology company that is contingent around financial services. And unfortunately, the majority of the revenue comes from trading volumes. I think that will change over time, and that is why I think it will get to $1 trillion market cap. But it is going to take them some time to be able to build out all the ancillary things like banking, credit cards, all this different stuff they're working on to be able to generate revenue as a finance company in tech that is not contingent on trading. And unfortunately, the past 3 months, crypto trading is down, options trading is down, retail sentiment has been dead because of the war. That's going to hurt Robinhood. And for some reason, the algorithms think Robinhood is a crypto play. So as Bitcoin has tanked, Robinhood has tanked as well. So, stock was at 7 2 years ago, went to 150. Now it's at 70. If you bought at 150, you're probably upset. If you bought at 7, you can't be too upset. But I think long-term, the innovation and product velocity is what I understand from Vlad as the largest moat to Robinhood. I mean, when I was pitching Robinhood at 7, people told me that there's no moat because it's just a UI that can be replicated from Schwab and Fidelity. I'm like, okay, well, why haven't they done? Why isn't Schwab and Fidelity as user friendly as Hood is? And it's like because technology and building products that people love is really tough. And Robinhood figured it out, and they continue to add on top of those products. So I think this year is going to be tough for them if the markets continue to be stuck. But I have zero doubt in my mind that Vlad wakes up every day and wants to absolutely dominate. Because after interviewing him a couple times, that's who he is, and I think that's how the company is treated internally with their culture.
Yeah, they seem to be doing great. Do you think as maybe a hidden risk for Robinhood's trading volumes is the prediction market an underlier there? Is that going to divert some of their clients?
Yeah, people don't like my take on this, but I think people just need to grow the hell up. I think the prediction markets is gambling. Therefore, I hate Robinhood thing. It's like, look, I get it. I think some people will leave the platform because they feel so morally upset that Robinhood would dare to offer them the ability to bet on March Madness. Mind you, those people are using an iPhone that was made with slave labor in China. So it's like there's zero moral outcry over Foxconn, which has to put nets in their building so that people don't jump off and kill themselves because of how bad the working conditions are to make the iPhone that you use every day. But Robinhood giving you the ability to bet on Duke or Kentucky, that's where, so like to me, I find it a lot of virtue signaling. I understand if people don't want to see that in their app, and Robinhood has created a possibility for you to take off sports betting and prediction markets, and quite literally you can contact support and say, hey, I don't want to see this in my app, and they take it out from your app. Now maybe they can do a better job of giving you a toggle that makes it even easier to do that, but save me the sympathy around the gambling epidemic that somehow will be created by Robinhood, especially when prediction markets I think have a very strong use case when it comes to the overall hedging and risk exposure of the broader market. So yeah, I mean, it's a headwind for some people perception on the brand, but realistically I don't think it matters that much.
Excellent. These are definitely some interesting companies. Who would you like to? I mean, who would you like to dive in deep on next? You've had some good discussions with some of these CEOs. Who's in the crosshairs? Who would you love to interview, talk to, get their take from?
I would. It's a basic answer, but I really would like to speak to Elon Musk one day. What he announced over the weekend with Terawatt to me Terafab is pretty incredible. He wants to build a terawatt of data center capacity, which is 1,000 gigawatts. One gigawatt is $10 billion. So he's talking about a lot of compute, and he wants to do that annually. So to me, the demand for compute that he sees in terms of the intersection of Tesla, SpaceX, and XAI is pretty substantial. Obviously, Elon is just an interesting individual in and of himself, and yeah, Elon, Jensen, I mean, Shopify's founder, Toby Luke, I would love to talk to him. I mean, there's Brian Armstrong from Coinbase. I think these people that have stayed at the company for decades and continue to be as bullish as they are in building the future, especially in the most exciting time to build the future in this AI revolution, those would be people I'd love to talk to.
We've got some wild minds currently, so it's exciting to see things develop and unravel how they are. It's super exciting. But this is great stuff. Tell our listeners where they can continue following you and learning about what you do and so on.
Yeah, Jared, thanks for having me on. Amit is investing on X. People can follow me there. And yeah, I would love to engage with any people who follow or comment along the journey. Also, I'm on YouTube at Amit is investing too.
Excellent. We'll make sure to get your links included with this episode. But great discussion. Thank you so much for sharing. Very enlightening. I know our listeners are going to love this one. So thanks for your time. We really appreciate it.
Thank you, Jared. Appreciate it.